Good afternoon, everybody. What's going on? What is going on? Um, just as a reminder in advance, I'm on my travel setup this week. I'm in Chicago, so I apologize if not all the sound sounds great. I know that sometimes these afternoon meetings, especially when I'm traveling and streaming through the VTF and through YouTube at the same time, the sound's not great in one direction or the other. I made a small tweak on the YouTube sound that maybe makes a difference for today's afternoon meeting. I didn't change anything for the VTF, but just do my best. And after this week, I'll be back in New York. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FinRecipic. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure is unchanged. I'm very short. Very short. Okay, let's look at the market here. So we had a second down day in a row. Uh, can you believe it? Can you believe it? Spies here down a whopping 0.25%. I think it was a little bit more than that. Looks like we're up slightly after hours. The Qs here down 0.3%. They're also bouncing back slightly from where we closed. And the IWM down 0.75%. So the Russell actually had some real relative weakness today and some real selling in it. The other indexes, the S&P held up better than I would have liked it to. You know, we got two down days in a row here, but cumulatively, I think it brings us down about 0.8% in the S&P. So nothing too dramatic at this point. Let's take a look at the daily chart though to see if there's anything we can glimmer from the technicals here. And directly speaking, not so much, honestly. Second down day in a row, but like I said, totaling Tate's letting me know a total of 0.87% down over the course of two trading sessions. We're into the ADMA on the daily. We have the potential of like this king queen pattern forming yesterday on this daily chart that could give us a larger retracement. But like I said in the morning meeting, um, it's a tricky trade because there's no extension. I kind of compared the king queen um, short setup in the spies to the Tesla short setup that we had communicated yesterday. Not to sort of monster day immediately back up, but like that short setup yesterday in Tesla is a trade that I really like. You get the shooting star. You have a lot of extension. The next day you get a gap up. So that gap up lets you enter Tesla short versus the previous day's high with not a ton of risk, but the extension creates a really good risk reward. When you look at the spies, and by the way, a king queen top is basically the exact same thing as like a shooting star, right? If you were to combine the Monday and Tuesday daily candles into one candle, you basically would have a big upside topping tail. But the difference between that and Tesla is that it's not with any extension. September, we have basically been moving higher every single day in the month of September until yesterday. But we had constantly kind of it was an accelerated grind that was primarily keeping us with a moderate degree of extension. So when you finally had one moderate down day yesterday, you're already into that equilibrium zone. You're already into the rising ADMA on the daily, and then shorting for continuation into a uptrending moving average like that tends to not have good risk reward. There's no technical there's nothing to look at here with the technicals that would make you believe, for the moment at least, that the uptrend is over, that a new downtrend is forming, that the market is broken technically in any way. And if anything, if the market were to hold true to the pattern that it's been in since the April bottom, there's a good chance that this is it. We had two small down days in a row. We've basically had just a couple instances of two down days in a row since April, which has been incredible. So 2 down days in a row, they're pretty moderate. They're into this equilibrium zone, and that could be it. We could tomorrow make new all-time highs, honestly, very easily. It wouldn't be that difficult. Or maybe we continue to dribble lower. Maybe we move a little bit deeper into the equilibrium area. Maybe we move into the 21 EMA. But the bottom line is, especially if you're looking on the short side of the market, you don't really have a strong advantage in terms of shorting a strong market into its equilibrium zone as represented by the space between the 8 and 21 EMA. However, I would argue that the standard chart pattern technicals are not the only thing that we like to look at as a team. And it's added tremendous edge to our team to have an understanding of market dynamics in conjunction with technical analysis. And it has enabled us to not necessarily perfectly to the day, but basically call out almost, I think, every major top and bottom that this market has produced going back to 2020. And eventually I'll be wrong on one of them. Maybe this is the one where I'm wrong on it. But I feel like we're roughly at that point again now when you're just looking at, where we are here at the end of September. We have this 2 week kind of window of weakness here. You don't have the corporate buyback bid. We just got through OPEX, so we rolled off at least some of the gamma. I know gamma is still strong, but the systematic community, as we discussed yesterday, is basically at the 100 percentile of long exposure on a 3-year look back. And it's just a matter of, can we trigger any of that for systematic selling to the downside? Um, that is, I think, the genuine question. And a 0.3% down day today isn't going to do it. It's not going to do it. It obviously depends a little bit on a day-to-day basis because the vol control community is doing their selling based on realized vol on the 1 month and 3 month look back. So like yesterday would have been a little bit more of an aggressive selling day if we could have sold down than I think today would have been. But you still need at least, it depends on the day, at least that 0.5% to 1% plus down move to trigger the additional selling from the vol control systematics. And for today, it just didn't do that. So you don't have any real selling coming in from vol control. You don't have any real selling that's coming in yet from the CTA trend following community. We're not exactly sure where their sell trigger would be, but there's a good chance it's down near 6,500. That's still $138 away or so in the SPX. If you the other potential sell flow is the levered ETF community, which was just buying, I think, in the last couple of weeks at like their 100 percentile. They was doing massive buying, but the note that I read from Nomura basically said that you need a 3% down move, and then that could trigger an additional $90 billion of selling from the levered ETF community just in terms of their rebalancing. Again, we're down 0.87%. So we're not there. We're not there to trigger any of that actual selling yet. It could still happen. I still am a big fan right now for this 2 week window that we're in here, especially at the end of September through the very beginning of October. I still am really believing in that Scott Rubner quote that I've been quoting constantly, which is if we can go down a little, we could go down a lot. But the 0.87%, that's not it. That's too little. You need enough to be able to trigger vol controls, trigger the trend following community, trigger the leverage ETF rebalance community to actually sell. And we're just not at any of those levels yet. So does it happen? I don't know. If it's ever gonna happen, if you're gonna get enough selling in the market to come in to trigger those levels, this is the opportunity for it to happen though. Because you just don't have the same supportive structure underneath the market to buoy it up. Like the only time what I would say is very unique about these last two trading sessions is that we went down. I know we didn't go down a lot, but we went down with no real new catalyst either, right? The only other instances where we've had any downside at all in the market since April lows, and there's been very few of those instances, was because there was an actual catalyst that forced selling, like a bad jobs number that we had at the very like end of July or beginning of August, some sort of economic event that was able to really trigger the selling. So what's unique about this pullback these last 2 days, in my opinion, is that it wasn't caused by anything in particular except for the fact that the buyers are a little bit tired here, and we know that. We know they're not on the bid in the same way. I mean, there is still some degree of the retail community, institutional community that has ammo to be able to buy. I think we're seeing more of that buying from the institutional community and honestly the retail community in the short squeeze names more than anything. That's here you're seeing the OKLOs and the Ion Qs and things like that. RGTI continue to go and continue to squeeze in today's trading session. I think it's just a combination of the retail speculative community, like focusing on those names at the same time as the institutional community that still has a lot of shorts or concentrated in those areas, and those things are still getting squeezed. But from an index level, we did just pull back for 2 days here without any real catalyst to go down. It was just kind of selling for the sake of selling when all we've seen now for months has been buying for the sake of buying. But whether or not that can actually catalyze into something larger and trigger some of these switches that we know create the feedback cycle for selling is to be seen. You do sometimes see um, when selling begins that it happens like this and then it does catalyze into something larger, right? I've certainly seen that before where the pullback begins slow. It begins as like a little bit of a roll down, and then all of a sudden it accelerates. And again, I think that just happens because of a knock-on effect of if you're able to go down enough to be able to trigger, some of the other flows that we're actually discussing. So, at this point, we'll see. The market's in a little bit of a tricky area. We haven't like, I, I wish I had that update from Goldman Sachs. It sounds like they haven't updated their CTA trend following systematic triggers in a while. But I'd love to see something get hit where I can begin to feel confident and go, oh, okay, this is how and when and where the bigger selling gets forced to happen. So I can feel a little bit more confident in pressing downside. Because pressing downside, even intraday right now, is still tricky. We had the sell off yesterday that really accelerated at like 1:30 in the afternoon. It was an okay down day. And then we had by the way, it's some, decent calls. I think overall, it was a little bit of a less is more type of trading session, but there were some decent calls. First and foremost of which was to sell the gap up this morning. Similar but different to the Tesla that I explained, where it gapped up in front of the shooting star high. Today we had a little bit of an index level gap up in front of the king queen high. So shorting the gap up today made sense. It presented a good risk reward. That was a good trade. But this sideways action between 9:45 and like 11 before we broke down for this next leg, I personally thought was very difficult because looking into the ADMA on the daily chart here, can you really press downside? And as we all know, pressing downside in this market has been very difficult. I would have more conviction in pressing downside if I felt like we were moving in such a way where some of these triggers were hitting. And that hasn't happened. But at the same time, the fact that we've sold in all these last couple of days does feel like a little bit of a character change to a market that has otherwise just been an endless grind higher market environment. And we'll see if that character change can continue and eventually if it can trigger anything. It's a pretty slow week from a catalyst perspective. Not a lot going on. We got PCE on Friday. If the PCE were to come in hot, maybe that could trigger some additional selling to get us lower towards those levels. But otherwise, it's a quiet week, and you almost just need again selling for the sake of selling, like we've seen the last couple of days, to magnify further down to actually trigger some of these levels, and then it could get fast. So we'll see. I like the Panic thought process on if we could break today's low tomorrow, especially if it could happen with a gap, that it might be really significant and catalyze some additional, selling from the technical analysis community. So we'll see if that happens or not. So that's where we're at on the index level. Again, I felt like it was a little bit of a quiet day, but we were able to be selective with a couple good calls. Some notable names that were out there this morning that got weak were like Nvidia. If Nvidia can lose 175, you would be losing the entirety of that move higher that happened with the OpenAI deal. So if Nvidia ever gets back below 175, I think this thing starts to look completely shot and will probably start to have an impact on the entirety of the market as well. So far, it's still holding that, but it's been really, really weak. Palantir, I think, is also notable that it was able to close below 180 because in the afternoon yesterday, got had the news with Boeing that ripped it higher into the close, gapped it up this morning, but then it lost the Boeing level low. Very different. This is a very different Palantir than we've seen. I know Palantir is almost back to its all-time high again here, but the traditional Palantir of the squeeze higher doesn't lose levels from news events, and it doesn't even matter what the news event is or if it's ever going to impact the bottom line, the stock would move higher. So you're notable to see some former leaders still not making new all-time highs, still struggling a little bit, and even in the face of positive news, actually giving up the starting points of those positive news events. That's also a little bit of a character change for the market. And then, the other major areas are still these like OKLOs, which closed on lows today, and RGTI, which, well, didn't close on highs today. So, maybe these things begin to run out of steam a little bit as well. I mean, they're just starting to get a little bit silly up here. And I think that's basically it. I know the big focus for me today and for a bunch of us was kind of the secondary plays on Micron. And oh, and this was another thing that I just think I know Pat mentioned it into the close, but I think it's worth mentioning again. Um, Micron had a phenomenal earnings report and finished down 2.5% or more on the day today. And um, to me, that is just representative of a tired and expensive market. Micron might be particularly tired and expensive because it went up 40% or so into its earnings report just this month alone. But that Micron earnings report, those numbers were absolutely phenomenal. And if it couldn't continue on numbers like that, I don't understand how almost any of these names that are strong names that have been leading the S&P and the Qs to these recent all-time highs can can continue on anything. So, one of my favorite signals, everyone knows, one of my favorite trading signals is when good news can't move the stock higher anymore. It's a signal for the other direction. And you're kind of seeing that with Nvidia, you're kind of seeing that with Palantir, you're kind of seeing that with Micron. And then just the big focus was like these secondary plays today. Some of these names I've been looking at for, a handful of days now. SanDisk finally, this is probably the best one. If we pull back to the ADMA on the daily chart intraday, STX was another one, still not even touching the ADMA on the daily for this entire period, this entire month. WDC, another one, still not even at the ADMA on the daily after this entire month. LRCX was a little bit relatively weak today. Still couldn't get down to the ADMA on the daily chart for that stock. Um, AMAT wasn't even negative, I don't think, today. So, really wanted to see if that Micron being negative on such incredible news could impact those other stocks. And we were able to make a few bucks on them, but it still was not an easy trade. They still held up, I think, really well. It wasn't like we just broke these names. They shattered back down to the midpoint between the 8 and 21 EMA and one giant red bar, which is what I really wanted to see, honestly, on today's trading session, given what Micron was doing. And that's not an incredible earnings report. I guess if it was not a good report, it would have been a little bit of a different result. But I'm sticking with some of this stuff. Google's another one. Finally got to the ADMA on the daily for the first time. But I think that these names have been so strong that when they actually begin their price corrections, which may have now started, they don't just stop at the ADMA on the daily. The spread is so wide when you look at SanDisk or STX or WDC, the space between the 8 and 21 EMA. That spread has become so wide that a lot of times when you see this degree of strength and that degree of a spread between those moving averages, the ADMA is not enough. Maybe it takes a pause at the ADMA, maybe get a little bit of a attempt of a bounce off the ADMA, but then that fails and you get the deeper correction. And that is certainly what I'm looking for with these symbols as I maintain my short positions. But I still, really want to see this heavier selling catalyze to the downside within this window of weakness here that we have over the course of these couple of weeks when you don't have the corporate buyback bid and when some of the gamma has rolled off. So we'll see if it happens. Potential counter change with this market. Like I said, these technicals are not broken. A little bit of a different price action that has got us down here that we haven't seen in months, but they're not broken. And we'll see if it leads to more. So that's all that I've got as an update off of today's session. I'm happy to answer any questions that any of you guys might have. Um, or otherwise, I'm here in Chicago for the week. I got a few things going on. I'm going to be meeting up with some of the Sterling people today who own Lightspeed and Sterling Trader Pro for an event that they're having. And then I'm going to a concert tonight. So I might be a little tired in the morning, but should be a good night. But I'm not in a particular rush in the moment. So if anybody's got any questions, I'm happy to answer them. Or otherwise, I think I might have covered it pretty well. All right. Surprisingly few comments in both the VTF and the YouTube. So I guess everybody's got it all figured out. This move feels like the meta move from February for the entire market. The meta move from February. Yeah, I mean, this was a little bit more violent and it gave some real major follow through, obviously. But I remember this up move here in meta that it was setting all kinds of records, right? Of not having a single down day for Meta in like an entire month, just going and going and going and going. And when finally it broke, it did break pretty hard, but that was in conjunction with the whole market breaking. I was actually thinking a little bit more, if see if I can find it. There was one SPY pullback. I don't remember which one I was even looking at, but this might be a good example back here from 2024. Where you can see it's like we weakened out and we rolled down, but there was nothing crazy here. And then all of a sudden, like we probably hit the catalyst point to create the systematic selling to come in. And then it did get, pretty violent here for like 5 or 6 days. Not like a major bear market or major market correction like we had in March or April this year, but like a very healthy rollback of, I don't know what this percentage is probably just eyeballing it. If I had to guess, this was probably like an 8% pullback or something like that in the spies. For the moment, this is more of what I'm kind of looking for and expecting in this market, where it's like we begin just by having a little bit of a buyer strike. It's a little bit weaker. The systematic community is not buying anymore. The buyback community is not there. We're a little bit weaker. We begin to roll a little bit. And then at a certain point, if you could start to hit those levels that create the vol control selling, the CTA selling, the uh, the ETF rebalance, then it accelerates a little bit. And then as we get that acceleration, we can then be, you know, trying to discover at what point we should be looking to buy the dip or cover our shorts a little bit more aggressively as we go through this next, like, 2 weeks or even a little bit further into October. But then there's a good chance that you just do similar to this by the time you're getting to the end of October, beginning of November, and then make new highs into the end of the year as all of the strength and forced buying comes back into the market. So we shall see. Um, from Bavin, OKLO daily closed below the prior day low. When you have extension on chart as such, do you buy puts or do you go short? If so, what would be the target? Or how do you trade OKLO based on today's close? Almost always in that situation, I'm doing it with stock. Personally, I'm shorting stock. I'm not buying puts. And the targets are generally when it comes to extension, the what I call the equilibrium zone. So the equilibrium zone is the space between the 8 and 21 EMA. That's what I consider to be the technical equilibrium for any chart that I'm looking at. So if I'm looking at daily chart extension and OKLO, basically my main first target would be the 8 EMA, which is currently trading at 119 spot 73. That will obviously continue to move higher because it's a moving average, so it's a little bit of a moving target. Um, the second main target is kind of like the midpoint between the 8 and 21 EMA, which I don't keep a 13 EMA on my chart, but if you did, it would be like a 13 EMA. So more or less the midpoint. So that midpoint is approximately 110. And then the final target, which just because the stock doesn't gets to the final target doesn't mean that I get out of it, would be the 21 EMA, which at this point is all the way down at $99. Uh, and then depending on the situation, I like so that's just the retracement of extension targets. Then the question becomes, does the retracement down turn into a reversal? That's always much more difficult to predict. There's usually a pattern development that has to occur. But I like the idea of if you get a really good trade like that, or you have real belief that the company is worth significantly less, which I kind of do for this OKLO, that you keep a small percentage of your position, 5 to 25% of your original position, just in case the retracement that works its way down to $100 becomes a reversal that works its way back down to 60 or 70. And that's how you set yourself up for some really good risk reward. So, thanks for the question, Bobbin. Back over onto the YouTube from Robert. What concert are you going to? I'm going to a band that no one's ever heard of at a really small venue. They're called Spanish Love Songs. Should be fun. Um, and in the YouTube, AV wants to know if I have any thoughts on Amazon. Yeah, so we went on an Amazon short two trading sessions ago. It turned out to be a really good trade. It was really weak again today. We actually communicated in the morning meeting a reshort on Amazon on the gap up because even though you had two down days in a row, I felt with the gap up there wasn't so much extension here that you couldn't push the short side. So two really good Amazon short calls and three trading sessions. There's a I read in a research note from one of the big banks this morning what's causing what their causes of the Amazon move lower, and I don't remember exactly what it is, but basically it has to do with Oracle's competition. So like I don't remember what clients, but maybe OpenAI as an example, turning more towards Oracle for whatever reason than Amazon. So Amazon basically moving down on competition in cloud from Oracle on the AI front is the reason that they're attributing to this now 3 day down move. So I'm not I'm not buying this chart if you're asking me my opinion on it. I am not buying this chart. I am not really looking to buy anything until we get through this like period of seasonal weakness that we keep kind of discussing. And I'm especially not looking to buy anything that's relatively weak. But you miss the short if you're not already short. You had the opportunity two trading sessions ago. You had the opportunity again this morning. If this thing opens up at 220, it's just a bad risk reward to continue to push it. But I'm not buying anything that's just relatively weak in a market that I don't trust right now. So hope that helps. Thanks, Greg. I appreciate that. I'm gonna copy and paste. I'm gonna copy and paste this. I need some good recommendations. I think on Thursday we're gonna try doing the deep dish pizza. I'm gonna give that a second shot. Basically, I've got low expectations based on my only other visit to Chicago. And we'll see how it goes. But I definitely needed these recommendations. I appreciate that. What's my take on Upstart? Yeah, no, I know a bit about the company too. So I don't like these companies very much right now. These types of companies, I think, will be particularly hurt if we go into a recession, which is definitely an if. But I read another research note or chart or whatever it might have been in Pat's note within the last week or so, where they do some sort of measure of the probability of recession, and it is relatively high, but it's especially relatively high compared to a market that's at all-time highs. Um, it might have been like a 30% probability or something like that of a recession within the next 12 months per whichever bank puts that data together. And again, I'm not sure how they put it together, so I'm not giving you the best information in the world. But I think that like any stuff that's related to like buy now, pay later, if a recession actually hits, these stocks get absolutely and utterly clobbered and destroyed. So that's kind of my general opinion. As far as the stock itself, you have quite simply a huge support level here at this like 60 to $61 area, and it traded down into it today. So in theory, you can try to go long versus like that 60 to 61 support. Why I don't like that is because this chart isn't just trading down into support with the market trading down, and maybe the market moves higher and this holds support and goes. It's doing that with relative weakness. If you look at this daily chart and you compare it to the SPYs, the Qs, this chart is really weak. You are getting lower highs and equal lows, so it's building like a little bit of a descending wedge here. It's applying downside pressure into that support. It's a little bit extended in that support, so it might not break like immediately tomorrow. They might try to hold it a little bit. But this thing is starting to look to me, especially if the market could ever continue lower, which is always the big if. This thing is starting to look to me like it wants to actually break down and give another leg lower. I wouldn't be surprised to see this thing retest $50, especially if you had any degree of a downside move. So, hope that helps. All right, gang. I'm gonna wrap it up there. Have a great night, everyone, and I will see you all tomorrow.